What's up, everybody? It's Mark Jones, President, Senior Loan Officer for iTHINK Mortgage here in San Antonio. Now with the ability to do loans in 22 plus states. So I wanted to give you guys an update that it's been way too long, in my opinion, that we've had one. And I think the best way to do that is to bring on some of my expert loan officers so that we can, hash it out, talk about some good stuff, give some people some nuggets and maybe something that they can take home and think about and maybe act upon later. So I want to introduce my two expert loan officers, Xavier Villarreal.
Hello.
And Nichole Kelley.
Hello.
Abuela Kelley.
Yeah, something like that. Yeah.
Yes, she is. Guys, gals, what do you guys, what's going on? How is mortgage? How is real estate? What are you guys hearing out there in the market?
So, do you want to go first, Nichole?
It's fun.
Yeah, it's doing good. I think the thing that I've been reading a lot is that we're starting to see some positive trends in the market, both in mortgage rates, the U.S. Treasury, and we should see that reflect in the housing market as well, probably within the next month or so. Definitely into the new year, I think as well, for sure.
So when you say mortgage rates going down, where are we at? I mean, what are you seeing? And obviously, in my opinion, folks out there are not buying because of the payment. Has nothing to do with the price.
Right.
Because as we know, us experts, the payment is not always reflectant of the home price. It's more so the interest rate, taxes, insurance, things of that nature that go along. So with rates in the 7s, 8s like they were a month ago, we're what, maybe low 7s, high 6s?
High 6s, yeah,
right?
Definitely. And so the biggest factor that is going to dictate, mortgage rates is going to be, the strength of the economy. Right now, that's being affected mainly by, the rates of inflation. And inflation is controlled, by the Fed through, the Fed rate, federal fund rates hikes that they're doing. And so far this year, we've seen 7 consecutive aggressive 75 basis point hikes. Most recently, the chairman of the Fed said that he is thinking about doing a 50 basis points.
Right.
And the reason for that is because they're seeing a positive trend on the effects of inflation. Now, inflation, you need to understand, happens when there's just too much money in the economy chasing too little goods.
Too few goods.
Too few goods.
Correct.
So when you have an excess of money, corporations, whatever, people that have things to sell like services or goods will inevitably increase the price until, it gets to a insane level. Well, with the amount of money that was put in 2020, right, to stimulate the economy, it just inevitably got us to this point. And with these hikes, we're starting to see a small decrease in the amount of money. It has been increasing drastically since 2020, and it's looking like in 2023, for the first time in, I believe, 70 years, we're going to see a decrease in the amount of money in the economy by like 0.3%.
Right.
And to give you like an example, in 2020, the amount of money in the economy increased by 25%, which it's never done.
Yeah.
So that is giving the Fed, some hope, and they think, okay, it's working. What we're doing is working, and we can kind of slow down a little bit on the aggressive tactics that we're doing to lower inflation. Now, this is just the beginning, so we'll see how it pans out. But with that being said, we should see a decrease in the interest rates, maybe 5s next year, and obviously, when you have lower interest rates, we should see more activity come back into the housing market. And I think, Nichole, you gave me some interesting stats about what we've seen in the housing market.
Yeah. So middle of 2021, homes were actually selling for like 102% over what the listing price was.
Sure.
So agents would value your home, say, I think this is a fair price. And then they would say, Mark, Xavier, let's put an offer on, and I'm listed for $300,000. I don't know. But then maybe it sells for 2% over.
Right.
Well, now what we're seeing is actually homes are selling for about 99% of the listing price, which says that it's shifting. Sellers want to sell and buyers want to buy. So they're kind of coming to a happy medium. So
Right.
we're not buying over what the value is. If we're buying at or just right below the value. So that's really cool because now we're not feeling like, hey, it's a bad time to buy, because what is a bad time to buy?
That's a great point. I mean, when really is a bad time to buy? Because you've got folks that, let's say, got caught in the nature of what was occurring, the frenzy, the scarcity of properties that were actually on the market listed, and having to overpay, which that has to be made up in time or with equity paying it down. But you've got a situation to where now they're able to get discounted homes, so to speak, but at a higher payment. And that being the case, there's a lot of folks talking about marry the home, date the rate, things of that nature, which totally I side with that, but I think it's a little bit bigger than that.
Right.
In the sense that people need to realize that if you are someone on the fence renting, period, like if you are paying rent, you're not only paying 100% interest, but you're also helping whatever landlord pay their mortgage as well.
And then some.
And then some. That's exactly right.
Because that landlord is not going to just want to make sure that their mortgage payment is paid for. If they bought the home back in 2010 and you're paying $1,800 for that thing, I guarantee you their mortgage is probably like $1,100.
That's right. That's right.
And so $1,800 to the big guy, or do you want to pay maybe $2,100 to yourself? Because at the end of the day, when times get hard, my husband he bought his first home for $88,000. Was it his dream home? Absolutely not.
No.
But it got us to where we are now. And if it wasn't for him taking that first step, and he was so scared, he didn't know what he was doing.
Right.
But he did. And now we are where we are. And we know that, heaven forbid, should we ever need to cash out, we're sitting on a chunk of equity.
Correct.
We're going to be fine.
And there's a lot of folks out there that buy into what media has depicted as the right time to buy or a good time to buy, when they should just look at their personal situation. And I think it is, I don't know, maybe it is social media and things of that nature, TV, that have put us in this category of I have to have X, a certain home, a certain price ranged home. Well, in this market, we've got higher rates. So that same priced home, you either compromise to pay more for it for the time being, or you get some act right and put yourself in a position that you're just paying equity towards something. Because honestly, if you look at the big picture of this, most people pay just interest or mostly interest for the first, let's say, 5 years anyway. Right? So I've been talking to a lot of investors, and they really could care less about the interest rate. It's more so, what is it going to yield them when they're renting the properties out? Because as long as they have that asset, they can then continue to make money moves.
Right.
Would you agree with that?
Oh, 100%. And I've been wanting to address that statement for a lot. That saying, what is it? Marry the house, date the rate.
Yeah.
That statement is like super nuanced, right? There's a lot of context behind what that statement means. And I see a lot of like financial gurus on social media, like TikTok, kind of like bash people for that statement. And it's like, well, if you reduce that statement to literally just the words, then yeah, of course it sounds dumb. But what the message truly is trying to say is what you were saying. If you can comfortably afford to purchase a home, you should always do it, because you're going to be building towards something.
Right.
And I know a lot of, educated financial bros might be able to say, like, well, there's always like a right time and a wrong time. And the only time that that's true is if you had like 100% accurate vision into the future.
Right.
If you had 100% accurate vision into the future, then you could say, yeah, this is a right time or this is a wrong time, because you can make the best financial educated guess. You could look at all the charts. You can look at all of the graphs. You can look at the stock and all this stuff. You can even have insider trading, but you don't know what tomorrow's going to bring.
No.
An asteroid could hit, you know what I mean? And so that's the only time that you'd be 100% in saying. So given that tomorrow's not, promised, if you can comfortably afford to purchase a home within your means, then you should always do it. It's a safe investment right next to the U.S. bonds.
Yeah, you're not wrong there.
But yeah, that's definitely true. And so, whenever I hear that, I think people always should put that disclaimer, is if you can comfortably afford it.
And when you say see into the future, I'll go a step further.
Mm-hmm.
If you are someone out there that is currently renting and know you're going to need to relocate out of the state, I totally understand. But then at a certain point, why not start building your empire now? If you can comfortably, like you said, or make sacrifices to purchase a home, become a homeowner, so therefore you have equity that is building year over year in addition to the year over year increases in property values, I would imagine that that's a pretty good spot to be in for the future if you make or take the action now, right?
Right. And I think another thing that needs to be talked about a lot when, we talk about if it's right or not to purchase, you also need to look at your local market, because your local market is going to be a lot different than other states. Like I think Texas, I saw, is still up 14% in its annual median home price in comparison to, I think it was last year. And that's not going to be the case everywhere else. So you definitely need to look into your local market as well. Because I mean, like, if you're just going to reduce that statement to what the literal words is, then yeah, it's going to sound reductive, but you need to take a look at all of the context and nuance, behind your situation personally.
I think to add to that, I think it's very important that first-time home buyers don't have analysis paralysis.
Yeah.
Because that happens so much, and I'm guilty of it myself, but a lot of people come to me and they're like, Nichole, I don't think I'm going to be able to qualify. I make $65,000 a year and I have, a $30,000 car loan and student loans. I'm like, okay, slow it down. Don't try and convince yourself you can't afford to buy. That's not how we're going to start this narrative. We're going to take a step back. We're going to start from the beginning. Get me everything. Let's take a look and see what you can afford. Right. Because it's not a no. It's a maybe not right now, or maybe it's not what you want, but why don't we get you into something that's going to help push you to get something else in 2 years?
Right. And put you in the position to be able to do so. So that being said, what are you guys hearing from your current customers? And then we'll talk about what you're hearing from realtors so that we can maybe set it straight or maybe confirm what their beliefs are.
I mean, from what I've seen personally, from both, like how Nichole says, I deal mainly with first-time home buyers. And the main thing that I have heard from them be concerned about is interest rates.
Right.
Now, given, the recent amount of data, I've been able to, pacify some of those concerns. And of course, when I do the Zoom calls and show them, they're seeing that it's not as bad as it was made out to be. So that has been the main concern, interest rates, as far as, my customers. Realtors, I guess it has also been interest rates. That's always going to be a main topic of conversation. But given, the change that we've seen since November 10th, we were at, I tell people, I was quoting people at 8% at one point, like last month, and now we're in the 6s. So things are starting to get better. And so I think that should be the main takeaway. But, given the slight increase in amount of days that a house is sitting on the market, I have also seen that benefit my buyers, in getting seller credits.
I don't think it's slight. I think it's quite a bit more.
Yeah.
Because sellers want to sell. So they're like, okay, how can we make this deal work? How can I get my sellers to get a net profit here?
Right. And this, what you're talking about, should be geared towards realtors.
Yes.
Listing agents and buyer's agents. Go ahead.
Yes. So, I have an agent. She is relentless. We have a buyer who is in a challenging approved price point. And, at this point in time, she is making the calls. She is saying, hey, this is listed for X. How much can we offer on it? I'm like, okay, well, we got to offer 20 grand under, but it's a bite. It's a
Right,
bite.
right.
And we're a contender.
Right.
And sometimes what it comes down to is $1,000 or $2,000 in seller concessions
Mhm,
or
yep.
a quicker close date or whatever the case may be. But I mean, sellers are not turning a blind eye to offers that are a little bit lower.
Correct. Because I believe that they listed their home for a reason. I don't think that there's anybody listing their home right now to try and just capitalize on increased prices. Now, what I have not seen a lot of is, let's call it property value crash. Because
Oh
there's
my
a lot of
gosh.
folks that are talking about this crash, but fortunately for us, we live in Texas.
Right.
For those in California, Washington, you've got places to where they're losing their butts on their property values. But one thing I have to say about that is that's historical. If you look at those states in particular, they're always on a up, down, whereas we have been on a steady uptick. If we happen to stay stag for a year, that's still a good thing because our year-to-year growth is always in that 4 to 6% range. And that's good money any which way you look at it. And I have to ask, what is your money doing for you in the bank lately?
Right.
Absolutely nothing.
Nothing,
Like nothing. I mean, savings interest rates are pennies.
Right.
Pennies on the thousands.
I mean, I would like to see, JC, if you can pull up just any like Google article, just type in Google to see how much, let's go, property values decreasing nationally. Let's just pull up some kind of article and let's look at the most recent article of that.
I think they've only gone down, I think like 0.1%.
Who knows? That's a national thing.
I can tell you,
you can't say, oh, they have gone down. Well, location.
Yeah.
Where have they gone down?
Right.
So let's look at this. Housing market prediction for 2023. Scroll it down. Let's see here. What does it say? Surging mortgage rates have put some much needed pressure on the hot housing market in recent months after home prices hit record highs across the nation. But as mortgage rates have begun to decline in recent weeks, many economists are mixed about whether home prices will continue their slow decline through the 2023 or crash. So let's scroll. Is this just an ad?
No, so you can go
There's
past that.
rates, because everybody's just trying. You know what? While we have that on the screen, go back to that. Because there's a lot of home buyers that end up looking at this thing right here that you see with all these rates in the 5%.
wow. Look at that with a 740 score and 20% down.
That is what we call bait and switch, you guys. That, when you look at it, you got to click into it. You've got to look at the rate assumptions. You've got to see how many points are being charged, how much in origination's being charged, and if it's even on a 30-year or a 15-year. Because sometimes, if you scroll up just a tad, JC, I want to see if 20% down on a 30-year, 5-year ARM purchase, and then it shows the points there. I don't know if that is an accurate 30-year term.
Actually, I just locked somebody in at very similar rates.
Yeah?
Because par was 6.25.
Okay, good deal. Well,
At
that's good
this
stuff.
scenario.
So as you can see, everybody, rates are coming down a little bit. And it is because the Fed has decided to, instead of go 75 points, they're going 50 basis points. Now, historically, the Fed is not what dictates mortgage rates. Inflation does. And inflation kind of dictates what the Fed does in regards to up or down on those rates. So scroll down. I want to continue this article to see what the hell they're talking about here. Many housing insiders warn buyers against trying to time the market as economy wades through the current period of uncertainty. Deciding to buy now or waiting is going to depend on the individual buyer's motivation and situation. Basically what you were saying a moment ago.
Yep.
Right? Does it say anything about, the median existing home sales price? And that's a national stat. Can we go to home values? Just type in home values in Texas, because I want to be very, very specific. Home values in Texas.
And if people are expecting to see like a positive uptick in November, because we saw mortgage rates drop. Know that we didn't see the mortgage rates drop till like mid-November. So we might not see the full positive effect in November, but more likely in
Well,
December.
I would go as far as to say that the mortgage business is ahead of what the Fed does.
Mm-hmm.
So if we're going to see a drop, we've probably already seen it.
Right.
So grab your pen and pencil, write this down. It's time to buy because we've already done that. You're not going to see when the Fed drops or raises by 50 basis points another decrease in rates.
Right,
we are
right.
typically ahead of what happens there.
Yeah.
Let's see here. Home values in Texas. Yeah, click that one right there. Let's go to Zillow. Who knows what Zillow has to offer? You got to click it before you. Just kidding. Texas home values. We are still up 16%.
Mm-hmm.
That's facts.
Mm-hmm.
So all these people talking about a crash for the last year and a half
Yep.
are absolutely incorrect.
And they're not talking to the people who own property,
No, they're
because
not.
we know
We
with
know.
property taxes once
Damn
a
right.
year, and we look at it and we're like, dang, okay, cool, but like, dang.
I'd go as far as to say that any property owner in San Antonio, at least, experienced the 20% or 10% cap that you can have year over year on your property value increasing. Why? Because they increased past that.
Mm-hmm.
Scroll down a little bit, JC. Let's see what that says. All right. Texas key takeaways, typical home values, and then year-over-year value. It's still up. Forecast. Let's see here. So I want to hone in on that chart that you see on the right-hand side. As you can see, in 2021, there was a large increase, dramatic increase in the property values. If we could, I wonder if we could do 1 year. Just go click the 1 year where it says max up at the top, right there. Click 1 year.
Now, obviously, that spike is in correlation to inflation.
Go ahead and click it.
When everyone has
There
money.
you go. All right. So
People are
this is
gonna-
the past year. So what you're telling me is that it continued to increase. And then we're talking a substantial increase until probably July. At July was when it tapered, but that taper, do you see it going backwards?
Mm-mm.
Do you see it going flat
No.
even? It's still increasing. Why? Because the inventory is still low.
Yep.
Because there's still people that need to buy and more people that need to buy than that are actually selling.
Yep.
So what is that? Is that economics?
Economics,
Like
right
supply and
there.
demand?
Supply
Something
and
like
demand.
that?
It's not just that, but one of the biggest misconceptions that I see about this crash is when people talk about a crash happening, especially in Texas or in just in general, they always like to akin it to the housing market crash in 2008. And the only time, and I actually did some research on this, the only time like the two largest crashes happen in history, which is like the housing market crash in 2008 and the stock market crash in 1929, both were a direct product of unregulated lending.
Absolutely.
Unregulated lending, right? So when you have people giving out money to everyone, of course you're going to experience a crash at some point. But that's not what happened here. This whole time that we've been lending, or even when people finance a home $100,000 over asking, whatever have you, those people still qualified under regulations.
Right.
This has all been regulated the whole time. Can we expect to see like maybe a little decrease from the market correcting itself from like, inflation? Maybe, sure, yeah. But we're not going to see a crash that happened, back in 2008, because this whole time it's all been regulated. People were
Right.
still approved, under the regulations that we've had since then, actually that were a product of then.
Right.
So that's one thing to think about. So whenever you hear, oh, it's going to crash, well, what do you mean by crash? Because if you're talking about a crash as a result of unregulated lending, that's not the case here. And you're not going to see that.
And then also too, I mean, during the pandemic, a lot of people took forbearance.
Yeah.
So the investors got smart. They know they're saying, hey, you don't want to pay. That's fine. Let's give you 12 months and then talk about it. So now they have a silent second on your home. So they're still going to collect. They're not
Correct.
hurting.
Yeah.
They know if you want to vacate that home, you're not going to miss out on that $74,000 you didn't pay for 2 years.
And it worked.
Yes, because look, we're still standing.
Correct.
We learned and we're getting better. And, nowadays it's not, as easy to get a mortgage because we're making sure that we're doing our part and we're not overextending or overlending or putting people in a financial hardship.
Absolutely.
So that is completely taken off the table.
Absolutely.
We're making sure that, this is risk-based. Like, are you solid? Are you making the money? We're not going to give you a $400,000 mortgage when you're making $12 an hour.
Right.
On top of that, I
relative.
think even we saw like DU, like the automated underwriting, like tighten up their.
Correct.
Yeah, because I know I saw it in my
On the conventional
I-
side?
Yeah, on the
absolutely.
conventional side.
I
So
see
for
it
those
all
people
over.
that are thinking like, oh, it's gonna happen, I'm telling you right now, as a lender who ran loans, they got tighter. The criteria got tightened up. So
So the last thing that I want to touch on before we jump off the air is I can imagine a lot of folks out there are waiting for the foreclosures to come. Why? Because they see media coming up with foreclosure rate increased by 3,000%. What do you guys have to say about that? I mean, what is your logic? And what would you recommend to someone that is talking about this? Nichole?
So 3,000% up from what?
Exactly.
Because like we just said, I mean, for the past 2 years, people have been able to take a sabbatical from paying their mortgage. So they're not going in foreclosure. To go in foreclosure, it's going to take a lot to get into foreclosure. So if we went from 0 foreclosures or a couple 100,000 foreclosures, which isn't too much, to now we're seeing 3,000%, okay, 3,000 up from nothing. So also, do you really want to go into that? Because if we think about it, people who, and maybe this is getting too personal, but like people who foreclose on their home, they're upset. So what is the condition of that home that you're buying?
That's very true.
They're
That's
losing
very
their
true.
home. They've lost everything and now they've lost their home. So how do you know that that's the best fit for you
Right.
and your family?
Well, I mean, you raise a couple of good points there. And regardless of whether it's a foreclosure or not, you're still going to have the same rates that everybody else is. Okay. But the chances are you're going to be going into that with needing to spend a little money to get it to where it needs to be. So yeah, you got the home at $20,000 off. What is the true value? Well, it needs to have new floors put in, needs to put this in. If you don't have that money, stop going down that pipe dream.
And if you're also going down that and you still need financing, guess what? If you have a stove that doesn't work and no heating unit, you're not going to get a home.
Yeah.
you
You're
have to go
having
hard money,
Yeah.
cash.
you're going to have to be pretty liquid, which is not always what we're seeing in this market. A lot of my buyers we're making deals work, but they're not 20% down. We're first time home buyers, maybe second time home buyers. They have 20% down, but for your first home, do you really want to get a foreclosure?
Right.
Have you really thought about it, or does it just sound really pretty?
I think it sounds really pretty.
It
Sounds really pretty. Well, I'm just going to take the words and put them right in the mouths of everybody else.
And then $20,000 under at the end of the day. I mean,
what is it worth to you? Truly.
do you have $20,000 to go and put back into it?
Who knows? And most of the
Maybe.
time, because we are in San Antonio, the answer is no.
Yeah. And I think they're expecting like a huge influx of foreclosures, which what I just touched on, we lend with the assumption that we're doing everything in our power to make sure that they don't go under foreclosure. So you're not going to see a huge influx of that. In addition to that, in the last 2 years, there's been more money in the economy than there's ever been.
Right.
There was like a 25% increase, like I mentioned, which we still saw an increase from 2020 to 2021, 2021 to 2022. 2022 going into 2023, we're seeing like a 0.3% increase in the amount of money, which is the first time that there's ever been a decrease.
Right.
But that does not negate the last 2 years of massive influxes of money in there.
Yeah.
And we're seeing, I think it was the business report for jobs. There's still being a large number of jobs being created. So I don't see that they're going to see like this huge surplus of foreclosures that they're not going to have to, compete for. I don't think that's the way.
Texas is not hurting.
No. Well, I mean, do you guys have anything else you want to add to this before I close it out?
Things are getting better.
Talk to an expert, because self-diagnosis is the most crippling thing, and we're not going to get very far.
Right.
If we just try to Google things ourselves, like, we have to break it down, we have to digest it, and we're in the business to help people, not just make money, but to help people for the long run.
Right.
So we will never put you in a hard position. If you can qualify for a home, okay, great. Let's talk about your options. Let's talk about long-term plans, but don't try and create your own. I mean, you can't lend to yourself anyways.
Right.
So just, you want to explore it, talk with an expert.
Yeah.
That's it.
Sit
Educate.
down and talk to an expert. I think that's probably the best advice anybody can take.
Mm-hmm.
So first off, Nichole X, thank you so much for giving your insight to this. And it just shows how much of an expert you are, because you can't just get on here and start spewing stuff that people can't go and Google to check you and make sure that what you're saying is accurate. You're using your resources. You're using your tools that are given to us to be able to provide to our customers. So if for the folks out there that are tuning in and watching this short, quick update on the market and real estate and what's going on, please make sure to like and share this, because you never know who's going to need it. Our promise to you is that we will do this at least once a week to give you some kind of insight as to what's going on in the market. We will continue to stay local unless you guys have questions or want to see some stats on different areas, and we will do our homework. So make sure to put the comments in there. We want some feedback on how we're doing. And we really appreciate you guys continuing to support what we have going on here, because we hope that whenever you think anything home finance related,
you think of mortgage.
I think mortgage.
I think more. You think of I think mortgage. Exactly.
We think mortgage.
I felt it coming. I was like,
You can go to wethinkmortgage.com or iThinkmortgage.com. Either way, you'll find us. But thank you so much for jumping in and doing this, guys. I really appreciate it.
Thank you for having us, Mark.
Thank you.
And for those, thank you so much. We'll catch you on the next one.